Welcome. In order to do this analysis, the first thing we need is to get some data. So the first thing we want to do is to go to the Yahoo Finance of your country, and in this case we'll be working with the ETF SPY, the SPY ETF, the most popular of all the ETFs. So we go into historical data, and here we just select the period. So for me, I will be starting from 2002 until now. We're in September 2023 now. And once done, I need to apply the monthly, so it's going to get me the monthly values before I download, and then I can download and that will give me my working file. So once I have my file, packed it up, I can already do a very simple chart using the line chart. I'm using the adjusted close because we want to make sure that we use the compounded value of the SPY, and then we can add the time on the horizontal axis. We had the month's day. So that's already done. The second thing I want to do is I want to calculate the monthly gain or loss. I'm calculating the difference between the 2 months as a percentage. And then I will be dragging all that down. So that will give me the monthly change, the monthly value. So I like to do a little bit of formatting so it's a bit clearer. I just highlight the cells that are above 0 in green, this way. And then the one that are below 0, I will just format them in red. Now I'm just going to take $100 as a starting point, and what I want to do is to calculate the change of value of $100. So I will just do $100 times the monthly gain, and then I will apply the compounding value, and that would give me, I will be using that to compare that with another chart. So this way we all start from the same amount and we can compare apples with apples. I'm doing a bit of formatting. Now there's something I like to do is I like to calculate the annualized return. It's quite a complicated formula. You need a start amount at the beginning of the trade. You need the end amount at the end of the trade, and here I go to the bottom of the column and I just select the last number there. And then what I need also is the period difference for how long I've been holding the trade in years. So first of all, I calculate the date difference using the last date and using the first date in days. And then I will be divided by 365. So the purist might tell me this is not completely accurate, but that's good enough for me. Let's say 21 years. So the calculation of the annualized return of CAGR is quite complex. I'll let you have a look at it. I think we need to trust Excel is doing a good job. I actually double checked it, so it works. And that gives us an annualized return. So that gives us more than 10% annualized. The reason why we cannot just divide the return by the number of years is that gives us an unrealistic of 34% return, which is in fact the return we would need to have if we were not compounding. So we'll use the annualized return instead, and we put it there. So this way I put it there because I want to be able to compare with a moving average. To calculate the moving average, it's very simple. We input this function average of the last 12 trades, and that gives us the 12 months average. What I'm doing next is I'm checking if I can trade or not. So for each trade I'm checking, is the SPY above its moving average of 12 months or not? And if it's above, I put 1, therefore I will be trading. And if it's not above, I put 0. So I'm checking the month before. So that's something very important. You need to be able to check the month before to decide if you trade on the current month. And after, I'm doing the same thing as before. I'm calculating the return starting from $100. And I'm multiplying the percentage return per 1 or 0. So if it's 1, I will be trading, and if it's 0, I won't be trading. So for the moment, you only see 1s, but that's because we're on uptrend. Everything is above the moving average. But here you can see that there are some zeros. In this scenario, I will not be trading. Now, to be more accurate, I need to have the SPY trade from the point in time when the moving average trade starts. So therefore, I will move down the $100 start here. So what I'm doing now is I'm just adding also the key gear for the SMA trade. I just go and take it from the previous sheet, so this way we can compare them side by side. What I'm doing now is I'm selecting the SPY trade and I input that into a chart, a simple chart. And I will be selecting the SMA trade and copy, and I will just paste it just on top of the charts there. So that's going to give me two colors, one for the SPY in blue and one for the moving average trade. And we can have a look, and it's already given us some interesting information that there is an uptrend at the beginning, so SPY stays above the moving average, so therefore it keeps trading. But after there's a bit of a dip, and then we get out of the moving average trade. Something else that we can do is we can calculate how many trades we have done, because that's another advantage is when we are trading this moving average trade, we don't trade as often, so therefore theoretically there's less risk. So that'll be interesting when we make the comparison of the two. So we already have roughly 50 trades less. The return is quite close. It's around, the return I suppose is higher on the SPY, but you have less trades. So now there's something else that I would like to do is I would like to calculate the drawdown. So the drawdown is the biggest fall that a trade could have. So a biggest fall is calculated from the peak up until the bottom. So what I'm doing here is I'm calculating what is the highest the trade has ever reached, so I can calculate then how low it fell from that peak. So, and I'm doing the same for the SMA trade. So here I have my two peaks, I have my two maximum value. For every trade, I have a look how far it is from the previous peak. So I'm calculating how far it is. So I'm dividing the current value from the last peak. So here, for instance, is 98 for a peak of 100, so that gives me 1.5% drawdown. And I do that all the way down. I do that the same for the other trade as well. And then I just need to take the minimum value of this. So that will give me the drawdown. That would give me my biggest loss. And I do that for the other trade, and that gives me my biggest loss as well. And then for each trade, I report the value here. I just need to go and pick it up from the previous sheets, a bit of percentage. So what we've noticed here is that if I pause it here for a while, that the percentage again is higher for the SPY, but look at the difference in drawdown. I mean, with the SPY, there is a point in time where I've lost 50% of my amount, as opposed to the SMA, where the amount lost was only 17%. I mean, it's not negligible, but what a difference with the SPY, really. So let's try and visualize this a little bit more now. So what I want to do is I want to take that chart here and I want to copy it here this way, and then I copied it beside to give us another view. What I like to do is to go on a different chart type. So I go onto a different chart type, and here I put the area, the chart type as area. So this way you can tell which trade was ahead more or less very, very quickly. So the SMA trade was above up until a certain point in time when the SPY really went nuts. Now, what I thought might be interesting is to do the same with the drawdown, visualize how low we were from the peak at every point in time. So I just do a type of chart the same. Here I go to the shortcut to increase the chart, and that gives us what is the biggest drawdown we've had. And we see this huge drop in 2008, 2009 there for the GFC crisis. And the other one towards the end is the COVID dip, I believe. And then we're doing the same for the SMA. We're copying on top, and that's it. So we see that the dives are not as crazy. There are more dives, but they are not as crazy. Well, it's debatable. At the beginning, there's more dives, I suppose. So if I use the same, if I remove those, I want to remove those axis numbers. I don't mean much. If I paste it here and I use the same area type of chart, You select the area here. That gives me a very good idea. So that tells me that the dips on the SPY were quite impressive compared with the dips on the SMA. So you have to decide, are you in for the long term or not? Are you in for the long term and therefore you can afford to have those big up to 50% dives or not? I mean, bearing in mind that's only looking at the past. Of course, who knows what's going to happen in the future, but that's just to have a look at this. So now I can do some formatting, so to give us some time to analyze all the data. So I'm putting everything back in blue. I'm putting all the charts also in a very deep blue. I am removing the chart names. I want to put something different in there. I'm changing the types of blue for the charts. I'm creating a text box for the new chart title that looks a little bit better in my view. And then I'm just doing some formatting here. So it's just up to your taste. And I should really remove the white from I put a different type of blue here. I think it stands out a little bit more, and it's still in the same type of blue than the background. So that fits in, that blends in a little bit better. So that's it. So that's a final version. That's only a starting point. I went quite quickly when we went through all this, but it was just to go through the Excel part, and then for the trading, for the back test analyzing, then you can take your time. You can have a look at this. So this is just a start. There's so many more things that we can do and analyze. So we need to have a look at how many drawdowns under 10%, for instance. I think that'll be very interesting. We can see, but it'll be very interesting to get the numbers. Try different types of moving average. We only had a look at the 12 months, so it'll be very interesting to compare the others. So we can have a look at all that in our next videos.